In today's video, I'm going to be discussing a very powerful concept with you, and that is the concept of entry box. In fact, if you understand this concept, it's going to really help you to take sniper entry in the financial market, whether forex or stock, is going to really help you. And I'm going to be linking this concept to the concept that I've discussed on this channel called the concept of money box. Today we are discussing entry box, but our entry box is going to be picked from within a money box. So let me just give you an idea of what I'm talking about. At Potential Miners International, we trade in wave. I want you to pay close attention now so that you can flow with me. I will still be doing live example, chat example for you so that you can relate. But I want you to really pay close attention. Now, I've drawn out what seems like a downtrend. As you can see, we are making lower low and lower high. So how do you now trade this wave? At Potential Miners International, we trade waves. Now, if you have identified this particular direction and you want to join the wave, how do you join the wave? Now, to join the wave, you need to be discussing the concept of money box, which I've discussed on this particular channel. You might look for the video. Now, after you are able to spot your money box, let's say your money box is inside here now. Let's say your money box, you have identified to be inside here. Now, inside this money box is what we will now say, okay, let's say this is weekly money box. Now, inside this weekly money box, we expect this weekly money box to generate an entry box. And is that entry box that you will position yourself to take the trade from. It's going to be as if you really know what the market is going to do. It's going to be like a sniper entry if you know how to really apply this. And this is what I want to be discussing with you in today's video. And I want you to pay close attention to me, to this video. I want you to disconnect yourself from anything that will distract you so that you can really understand what I'm discussing. So now, how do you identify entry box? Before I go deep into showing you practical example, I want to bring to the table two concepts. Concept of area of interest, and that is what we call money box. That is what we call money box. This is an area of interest at the beginning of any wave. The second concept, key concept now, key concept, key concept. Number one, area of interest. Number two is what I call area of emphasis. Area of emphasis. You really need to understand these two concepts before you can be able to capture the concept of entry box. As much as I'm going to be explaining some things theoretically here, I will really pin it down into the chart so that you can relate to what I'm talking about. But please pay close attention so that you will understand theoretically what we are talking about. Now, the concept of money box, like I said, is the beginning of any wave. So let's now say that we have an upward uh, trending market like this. Suppose you want to follow the next wave, which is the next impulse wave. Now, how do you join this wave? This is the wave now. How do you join this wave? Now, to join this wave, this is the wave that you are interested in. Let's say, let me label it now. Let's say this is wave one, wave one, wave one. This is wave one. Let's say this is wave two. Let me put it here. Wave two. Now, But the one that interests you is this third wave that you want to trade. Just using this as an example. Now, how do you join this wave at the beginning or the start of the wave? So I've discussed on this channel the concept of money box, and I said that money box is usually at the beginning of any impulse wave, be it daily impulse wave, weekly impulse wave, or monthly impulse wave. But specifically, I want you to just focus on weekly and daily impulse wave, because monthly impulse wave, as much as you can still analyze that within the monthly impulse wave, you can have three weekly impulse wave. So instead of focusing on monthly impulse wave, you can just focus on the first weekly impulse wave, the second weekly impulse wave, and the third weekly impulse wave, so that you just catch your trade, on a weekly wave like that. But then what I'm trying to explain in this video is how do you use entry box as a sniper entry when you want to join the impulse wave. Now this is your money box, for instance. Now within this, and now this money box is what I refer to as your area of interest. By the time I get to the chart, it will be clear what I'm trying to explain to you. But I want you to follow me to just have a background, theoretical background of this concept. It's very important. Now, this money box now is our area of interest. That is where we expect that the market will push to the upside from, if it's an upward trend, and if it's a downward trend, we expect that this money box is an area that has enough of liquidity that can generate an impulsive wave. Now, money box is an area that has enough of liquidity, so it's our area of interest. However, within this money box, we still have an area of emphasis. And these two key concepts, they are very important for you to now understand the concept of entry box. Are you getting it now? So within the money box, there is usually an area of emphasis, and this is the last candle, at the origin of an impulse wave within the money box that breaks a structure. Let me repeat that. The last candle within the origin of an impulse wave that break a structure within the money box. Now, I'm still going to show you in the chart so that you will understand. Now, when you are able to identify the money box and the area of emphasis, that is when you can now say, okay, you can now begin to position for your entry box. Your entry box is where you will now enter for. Now, let me just say, let me skip this theoretical explanation so that somebody can relate. Let me see, suppose we want to trade weekly wave. At Po ten tial Miners International, we have our checklist, and one of our checklist is that on the weekly chart, we want to use this free tool to evaluate the directional bias of the market or the assets that we are interested in trading. Now, I don't want to bore you with going back to check the monthly, to check the market orientation and all of that, but of course, that's part of our checklist. But now look at this chart now. It's obvious that on the weekly, the trade is, or the market is trading above the cloud. So we are in a clear upward directional bias. So having established that, suppose you want to trade this market now, and you want to trade, you need to, okay, this is the weekly wave now. You are expected to wait for at least one period of correctional move after the impulsive wave. You see this impulsive wave? I just want you to get this so that you understand what we trade at Po ten tial Miners International. This is the impulsive wave, and this is the corrective wave. Now, for you to trade any particular wave, after an impulsive wave, you are expecting that particular asset to correct for at least one full period, which means If it's a weekly wave, you will expect one full week to be a corrective movement. If it's an upward impulse wave, you will expect one full week to close as a bearish candle. So after that week, the following week, that is when you can now begin to look out for trade opportunity. Now, for you to now understand vividly what I'm explaining, you need to still recall, that is if you have listened to the video on money box, I explained the 3 time frames that you are to use to trade any wave you want to trade. If it's a weekly wave, the weekly chart is your anchor chart. The daily chart is your confirmation chart, while the 4 hours is your entry chart. So now, if we are to trade weekly wave, you want to check the daily. And I said in that video that anytime you check the daily and the market structure is opposite the impulse wave you want to trade, you will have to wait until the market structure is in favor of the wave you want to trade. Now, this market structure now, we started looking for trade opportunity from this period. Now, you will notice that there was a break of structure to the downside. This was a break of structure to the downside. It might be very subtle, but then if you can spot it, you can see it, break of structure bearish. Now, because you are expecting to trade an impulsive wave in the direction of the directional bias that you have established, which is a buy, you are not going to take a set trade until the market structure break to the upside in favor of your directional bias. In favor of your directional bias. This is very important so that you can follow us as we take trades in subsequent period, so that you can really understand it. Now, there is a break of structure to the upside around this place. So this is where we can now begin to look for trade. And I said that once you have a break of structure to the upside, the origin that created that break of structure is your money box, and that is what we call weekly money box, WMB, weekly money box, or in full you can say this is weekly money box, weekly money box. You see that now, but WMB for short, so that you will just understand it. Now, this weekly money box is what I refer to as your area of interest. Take note of this, area of interest. Once the trade comes back into this area of interest, you are expected to go to your entry time frame. In this case now, 4 hours chart is our entry time frame. So let's go to 4 hours chart. Let's go there very quickly. Now, I want you to pay close attention now. You see, this weekly money box is our area of interest. The reason being that we expect that you have enough of liquidity around this weekly money box that will generate an impulsive wave to the upside, because we are trading a buy impulsive wave or a bullish impulsive wave now. So now, but within this money box, you need to look for, within the money box, from the start of the money box, look for any impulsive wave that breaks structure within the money box. If you have, let me zoom this so that you can really understand what I'm trying to explain. This is the money box now. Can you see weekly money box? Now, within, at the beginning of this money box, you can see that there was a break of structure within the money box. Break of structure within the money box. You see, break of structure bullish within the money box. Now, this break of structure, the last candle that created it is expected to be our area of emphasis. Take note now, area of emphasis. This is very important. we expect this market to come into the money box. We expect that you have enough of liquidity within the money box. However, if the market could not pick liquidity immediately it enters the money box, there is a particular area that when the market gets to this place, we expect that the order within this area should push the market up. Listen to this. This is not entry box yet, but I want you to understand these two concepts. Money box is an area of an engulfing move or an order block that has enough of liquidity that can generate an impulsive wave. Now, within the money box, you have what we call area of emphasis. Remember, our money box is area of interest. Now, the area of emphasis is the origin of any break of structure within the money box. Now, this particular area of emphasis, we expect that if the market can trade back into this place, there should be enough money that can push, specifically that can push this price up. I'm still going to give you or show you another example, or if possible, two or three examples, so that you can really follow me. And if possible, you can pause this video, rewind it, and listen to it over and over. If you can apply this to your trading system, it's going to change the game for you. Now, we are talking about flow of money. Now, we expect that if the market trade into the money box, there should be enough liquidity in the money box, which is our area of interest. However, if the market could not pick the liquidity immediately it enters the money box, there is an area of emphasis created by the origin of the order block within the money box. Now, a break of structure happen, the origin now that caused that break of structure is our area of emphasis. That area, we are expecting that there should be enough of order there that can send the market back and create the impulsive wave that we are looking for. Note this is not yet our entry box. Remember that the discussion for this video is entry box. Now, if the market could come back to the area of emphasis, it will create your entry box by creating an engulfing move. However, if the market could not come back into the area of emphasis, for you to know where to enter, the market should push up and create a break of structure. Let me explain this now. You will notice that this market did not come back into this area of emphasis. You will notice that it could not trade into it. Although it was very close, but it could not enter the area of emphasis. Now, if the market sent, if the order within the weekly money box send the market back, it should be enough to the point that it will cause a break of structure. You see what I'm saying now? A break of structure in the direction of the impulsive wave that we want to trade. This is a break of structure now. A break of structure, you can see that. Now, after that break of structure, your entry box will now be when you see that this was the candle that broke the structure. This was the candle that broke the structure. Within this candle, you will notice that when you begin to trace this break of structure back, the first candle that this particular candle broke was this. So this happened to be your area of entry now. This is your entry box. Entry box. And you will mark that area, mark this area, and the last low within the money box, this area now forms your money box. I mean your entry box. I beg your pardon. Your entry box. Entry box. This is where you now want to position. Now, in most cases, or in some cases, don't let me say most cases, The entry box is very wide because the move that created the break of structure or the engulfing move is very sharp. So you can now just reduce it a bit to say that instead of entering the market exactly at the beginning of the entry box, I just want to create a clearance a little bit. This is by choice because this will really affect your risk to reward. If you want to take risk to reward of 1 to 5, you can enter at the tip of the entry box. But if you want to really take advantage and take ratio 1 to 6, you might need to just give a clearance back into the entry box before you take your position. You see now. And all other things held constant, if you take your position, your stop loss below the lowest low of the entry box, you can now take ratio 1 to 5, ratio 1 to 6, depending on your appetite to wait. In fact, you see this now. This market, you are still, if you are to take ratio 1 to 6, it means you will still be waiting. Are you getting it now? So, but if you want to take ratio 1 to 4, ratio 1 to 3, you have already, you can say you already have ratio 1 to 4. Are you getting it now? But for us at Po ten tial Miners International, if we are to take this trade, our entry box, we expect it to come back to this place, inside this place. We can wait, as that is just by way of refining. Are you getting it now? Sometimes you might miss a trade because you are refining this far, but then if you can catch this trade, it's going to bank in average of ratio 1 to 5 for you, and of course in most cases ratio 1 to 6. You see, ratio 1 to 6. Can you see that? This is just by the way of refining. Now, if we have refined, it means this market will not pick us. And of course, we can let it go because within the weekly impulse wave, if you miss the first entry, you can go and trade a daily impulse wave. Daily impulse wave. Let me go back to say, suppose, let me clear all this. Okay, I think we are still good. I might not need to go back to what I've typed before. Now, this was the weekly impulse wave. I mean, the weekly money box that we identified, WMB. Now, immediately the market trade back into it, you can now, anytime you have a break of structure, that is one impulsive wave on the daily. Are you getting it now? On the daily. So this is daily impulsive wave, break of structure bullish. Now, you can wait for correction on the daily and trade a daily impulse wave. I want you to look closely now. Suppose we miss that trade for the weekly. Now, this move now creates a break of structure. We will wait for one full period of corrective move. Remember that I said that if you are trading daily impulse wave, your anchor chart will be daily, your confirmation chart will be 4 hours, while your entry chart will be 1 hour. You can go and listen to the video on Money Box. I explain these things there. So now, if you are to take a daily impulsive wave, so after the break of structure, now that the structure is in favor of the directional bias, so you have nothing to fear, you wait for a period of corrective wave, which means in this case now you wait for a full day of correction. The second day now, you will now go to your confirmation chart, which is the 4 hours. You go to your confirmation chart and you are expecting an engulfing move. This engulfing move is what will form your money box. We call it daily money box, or for short, you can say DMB. Now, this DMB is your area of interest, just like I explained in the case of the weekly impulsive wave. This DMB is your area of interest. Now, for you to now spot your area of emphasis, you need to go to your entry time frame, which is the daily, which is the 1 hour in this case now. Because you are trading daily impulsive wave, your anchor chart will be daily, your confirmation chart will be 4 hours where you spot your money box, and your entry box, I mean your entry time frame will be 1 hour, and that's where you are going to spot your area of emphasis and your entry box. You get that now? You might need to listen to this video so that you understand what I'm talking about. On the anchor chart, that is the wave you want to trade. If it's a daily wave, your anchor chart will be daily wave. That's where you look out for an impulsive wave, then you wait for one period of correction, which means one full day. The second day, you move to your confirmation chart, which is the 4 hours. On the 4 hours, you are waiting for an engulfing move that will create your money box, which is your area of interest. Immediately that is created, you move to the entry time frame, which is 1 hour, and you are looking for number one, your area of emphasis. Now, I explained that area of emphasis is any origin that created the last candle of the origin that created a break of structure within the money box. I want you to look very closely now. Look at this is your money box. This is our money box. Within the money box, there was a break of structure. Can you see this? A break of structure around this place. Break of structure bullish. Let me just use this one. Okay. This is within the money box now of the daily impulsive wave. I want you to look very closely. The area, the last candle of the origin is your area of emphasis. Now, this area of emphasis, what it's saying is that we know that within the money box, we have liquidity. However, if when the market enter the money box, if the liquidity within the money box, at least at the beginning of the money box, at the tip, cannot send the market back, when the market trade into the area of emphasis, we believe that you have enough of liquidity there. Note that your area of emphasis is the last candle of the origin that created a break of structure within a money box. Okay, now look at this chart now. The market trade back. In fact, it was almost entering the area of emphasis. And we are now expecting that after the area of emphasis, you should have an engulfing move. You see, engulfing move means that if it's a bullish engulfing, you will see a move, a bullish move that close totally above, a candle that is bearish. And that did not happen here, it did not happen here, it did not happen here. This was where we have an engulfing move. Now, at the tip of that engulfing move, from this place, if you begin to trace it back, the first candle that this engulfing move close above was this. So you just draw it like that. Now, the last point within the money box was this. So this happens to be your entry box. You remember that our focus is we are discussing the concept of entry box, and how to use it as a sniper entry in Forex. Now, this is your entry box. Expectedly, if you just want to trade and you want to take ratio 1:5, put your order at the beginning of that entry box. Then let your stop loss be below it slightly, taking cognizance of the fact that you have spread just slightly. It should not be too much. In fact, you can look at the spread and add 3 pips to it or 4 pips. That will form the space between this lowest low and where you will put your stop loss, just to create clearance for the spread in the market. Now, if you are taking the trade from the tip, you can target ratio 1:5. At Po ten tial Miners International, by the time we are targeting ratio 1:6, we want to ensure that we make clearance for a little bit, that you see now, just a little bit down, and it will give us ratio 1:6. Can you see that we already have ratio 1:6.38? The same trade. But suppose you just want to take ratio 1:5, put your order at the tip of the entry box. Let your stop loss be below the entry box with the clearance for spread plus maybe 3 pips or 4 pips. then you can just write your trade. You see that? So whether you want to take ratio 1 to 5 or 1 to 6, it will give you that trade. Now let me just look for another example. Let me check USD CHF. USD CHF. Let me show you another clear example. The reason why we are picking this pair is because at Potential Miners International, we do what we call identification analysis. We do what we call optimization analysis, which we call what we call optimization protocol. And the essence of the identification protocol and optimization protocol is so that we can identify a cross capital flow. So by the time we are to pick assets to trade, we are picking assets that has cross capital flow. I've done a video on cross capital flow. You can look for it on this channel. You go and listen to it so that you understand what I mean by cross capital flow. That is how you pick the assets to trade. And the reason why I'm picking on this is because these are examples of cross capital flow. We have gauges that we use to measure or evaluate the flow of capital into each of the currencies, so that by the time we pair it, we are certain that there will be cross capital flow, and that is what will generate the impulsive wave that we are talking about. Now let's say we want to trade this particular asset, USD CHF. The first thing you want to look out for is what is our directional bias, which means that you want to use this free tool. I've done a video on this free tool. You can look for it on this channel in case you are hearing me or seeing me for the first time. This free tool is a free tool. In fact, if you need the settings, you can just message me on the comment section. I'll send it to you. I've sent it to some people that requested for it. It's a free tool, but you have to set it in a particular way, which is particular to Potential Miners International alone. So, and of course, it's free. I can give you for free. That's not a problem. Now you have gauged this market now that this market is on a sell directional bias. So it means you will only be selling. USD CHF, you will only be selling as long as the price is below the cloud. There is no news, there's nothing that should make you to take a buy on this trade, especially if you are trading based on our own trading system. If you have your own strategy that you know how to navigate your way, is okay. But as long as you are trading Potential Miners International Trading System, which we call PMI Global Macro Trading System, you will only be taking a sell when the directional bias gauge says that the market is below the cloud. On the weekly chart now, take note. So because this is clear now that we want to take a sell on the weekly, now this is an impulsive wave on the weekly. You can see this, an impulsive wave, and this was the wave that broke the market into the sell directional bias. I said that after the impulsive wave of your interest, you are to wait for at least one period of corrective move, which means that an impulsive wave to the downside will be creating a bearish candle. So you are to wait for one full week of a bullish candle. Now, and this is the one full week. Let me zoom this so that you get it. This is the one full week. You will not do anything during this week. Now, the following week, you will position yourself to go to the confirmation chart. You know, for weekly impulsive wave, your weekly is the anchor chart. The reason why I have to be repeating this is so that it can resonate with somebody very easily. For weekly impulsive wave, if you want to trade weekly impulsive wave, the anchor chart is the weekly chart. The confirmation chart is the daily chart, while the entry chart is the 4 hours. So when you get to the daily chart, which is the confirmation chart, you will notice that we already have a break of structure to the upside from here. So, and I said that once on the daily you have a break of structure like that, you are not going to do nothing until the market show you a break of structure in favor of your directional bias. This is just simple, and we are pushing for that people can be trading with a relaxed spirit because you already have your conditions. You are not using emotion. Now, a break of structure to the upside, you are now looking for a clear break of structure to the downside. I can spot one here. Now, a break of structure bearish. You see that now? Now, after this, you are to identify the origin that caused that break of structure. That is going to form your weekly money box. You see that it's the same condition that you apply on any chart you want to trade. You don't put emotion. Now, once you have a break of structure on the daily now, you are now rest assured that the market is ready to follow the trend to a larger extent. Once the break of structure is in favor of the directional bias, you can be clear to say, okay, we are expecting the trade or the market to trade back into the weekly money box. This is the weekly money box. Then we go into our entry time frame, which is the 4 hours. I want you to look at this very closely now. Now, on the 4 hours, you are to look out for area of emphasis. That's the first thing you want to look out for. And what is an area of emphasis? Area of emphasis is that last candle of the origin that created a break of structure within the money box. You notice that there was a break of structure here. I want you to look at this very closely so that you can really get what I'm saying. There was a break of structure bearish here. You see that? Now, the last candle that created of the origin, the last candle of the origin, this was the origin, and this was the last candle that created it. So this forms your area of emphasis. Now, this area of emphasis in most cases, if market breaks into it and close below it, this area of emphasis, we have to still include every other area below within the money box. You get that now? So if the market break below it and close, you know that this particular money box is not going to hold. Now, what makes the area of emphasis different is because at this origin that created a break of structure, we expect a lot of orders to be here. So if the orders here could not send the market down to create the impulsive wave that we are looking for, it means this money box might not be valid. And of course, it's just one of those things, you move on. Is that okay? Now, after the area of emphasis is being tested, you are expecting that the trade should close and cause an engulfing move. Immediately it causes an engulfing move or candle. You see these 3 candles closes above this bullish candle. This is an engulfing. Now you can take your trade because this will now form your entry box. This is now your entry box. The only thing you might need to do if you are trading with potential miner is because we are targeting ratio 1:6, you might need to now refine this particular entry box so that you can just reduce your risk. If we are to trade at Potential Miners International, I will probably be putting the trade here, the stop loss above this place, because we are expecting to see ratio 1:6. Ratio 1:6. You see that? And unfortunately, the market did not come back there, which is fine because within the weekly wave, you can still see another daily impulsive wave. You see that now? You see this? You don't need to struggle with the market. If it's not coming to pick you for a weekly wave, wait for it. Within the weekly wave, a weekly wave will have 3 daily waves, impulsive wave now. So you can position yourself for one of the daily waves provided that the weekly money box has been tested. In fact, Immediately your weekly money box is tested, be rest assured that if the market creates a break of structure in favor of your directional bias, you will have at least 2 daily waves. I'm telling you, you can go and backtest what I'm saying so that you will see it for yourself. So you should be able to position for at least one of these daily wave, and of course you don't need to chase the market. Suppose we miss that, this is another break of structure. Now it now means that on the daily we want to now trade. There's a break of structure. We are going to now wait for, let me clear this for the weekly. Let me leave this. We are now going to wait for one full day of corrective move. You see this? Then the following day, we are going to position and go to our entry time, your confirmation time frame. Now, you have gotten to your confirmation time frame. You don't need to struggle with any market or any trade because you are expected, to take a sniper entry and just ride the move. Now, on the entry, on the confirmation chart, which is the 4 hours for a daily impulsive wave, you want an engulfing move to be created, and this is it. And this is what will form your daily money box. You see, this is the weekly money box. This is the area of emphasis for the weekly. The market tap into it, but it could not come back to pick us where we set our sniper entry. Now we wait to trade. There was a break of structure. This was the break of structure on the daily. So we are waiting to trade the daily impulsive wave. So we come to the 4 hours, which is the confirmation chart for daily impulsive wave. Then we wait for our daily money box. We are now going to our entry time frame, which is the 1 hour, to look for first what is our area of emphasis. Area of emphasis. Now we are here. I want you to just pay close attention. Area of emphasis. You have to ask yourself, do I have a break of structure within the money box? That's the question you have to ask yourself. I want you to look very closely now. Look at this place. This is your money box. Do you have a break of structure within the money box? And you are targeting the first break of structure. If you are looking at it from this place, you will notice a break of structure here. This broke a structure. This was another one, but this is the second one. Your focus should be, these are areas of emphasis, but you are looking for the last one because you expect that immediately the market gets to your area of emphasis, if it breaks above it, it means that that particular money box might not hold. So your attention should be on the area of emphasis of the first break of structure, knowing fully well that if your market traded into this money box and it reversed, if it gives you a break of structure, you can still take your position. I might show you one of the examples that the market did not get to your area of emphasis. E entered the market, the money box, and there was a break of structure. You see, that break of structure is enough to tell us that there is enough of liquidity that will create the impulsive wave, and that's how we trade. So now there was a break of structure. This is it. You can see this, a break of structure here, a break of structure bullish. So the last candle of the origin, this was the last candle. Listen to this. Last candle means the candle that has the lowest low within the origin. So this is it, this particular one. So this is our area of emphasis. Area of emphasis. Now when the market trade into it, you are not to take trade immediately. You want this area of emphasis to create an engulfing move, which means that for a sell now, there should be a bearish candle that closes below a bullish candle. You see, we cannot get that until when we got around this place. This was where we got it. And this is where we position. This is, by the time you look at this engulfing, you see this is the starting point of the engulfing, and this is the lowest low of the trade when it entered the area of emphasis. This is lowest low. I want you to pay close attention. This is the lowest low. It's not this low that you will consider. This is the lowest low, because the price can still come and retest the area of emphasis to pick, another set of liquidity before e now create. So this before e create the impulsive wave that you are looking for. So this will now happen to be your money box. Remember that I said this is, your entry box now. Remember that I said if you want to take ratio 1:5, you can just position your trade at the tip of the entry box, then very slightly below the lowest low, you put your stop loss, then you take ratio 1:5. However, at Po ten tial Miners International, we want to refine so that we will not fall a victim of our trade do not get to TP. So what we do at Po ten tial Miners International is that we ensure that we refine the trade a little bit to be able to get enough of ratio in terms of profit, and this is ratio 1:6. So if we are to pick this trade now, we would have positioned it here. I want you to just take a look. It's a sniper entry. It will just come and pick you. You don't need to struggle. The one that will pick you will pick you. You don't need to struggle with it. You see it now. This was the entry. It will just pick you from there and immediately it starts to go into profit. Do you see that now? Let me see if I can use another example. Let me see Euro JPY. Let me see. This is another currency pair that has cross capital flow. Currently, cross capital flow. Let's see. Cross capital flow, if you have not listened to that video, means that if it's Euro JPY, it means is either Euro capital is flowing away from Euro while capital is flowing into JPY, or capital is flowing into Euro while capital is flowing out of JPY. So that is what we mean by cross capital flow, and that is when you can say you have a pair to trade. We call it optimized pair, optimized currency pair, and those are the pairs you are to trade. You can't just pick trades, currency pair randomly. If there is no cross capital flow, you will struggle. In fact, most of your trade will hit stop loss. These are discovery, with a lot of effort that we are putting into the research into the market. And these are discoveries, and you don't want to shy away from what I'm talking about. These are discoveries. If you want to trade, if you pick any currency pair, you must ask yourself, is capital flowing into any of these currency pair? Then if yes is the answer, then ask yourself, is capital flowing away from the second currency pair? If no is the answer, don't trade that currency pair. I'm telling you. So you might need to do your research to confirm what I'm talking about. Of course, we have our gauges and our processes of identifying these currency pairs. We only take trade for cross capital currency pairs with cross capital flow. Now, I don't want this video to be too long. I know we have already spent a lot of time already, but then let me just show you one example. Now, suppose you want to trade this pair. You are expecting that if you want to buy, the directional bias should be a buy. If you want to sell, the directional bias should be a sell. Now, in this case now, from this period, from 9th of June 2025, the currency pair Euro JPY has been on a buy directional bias. So, having said this, if you can see at least one period of corrective wave on the weekly, it means you want to take weekly wave. Otherwise, you are looking for a daily wave. Are you getting it now? I want you to look at this now. Now, look at this very closely. Before the market broke above the cloud, there was a particular one period corrective wave. It looks like that, but this has not given us a defined directional bias. As at this time, we will not be looking to buy. So you are not going to analyze this until the market closes above the cloud. So if in subsequent in the nearest future, let's say next week or next 2 weeks, we have 1 week, 1 full week of correctional move. The following week, we are going to position for a weekly impulsive wave. I'm telling you. Now, let's go to the daily. We should be able to identify a daily impulsive wave. Now, I said that if you want to trade a daily impulsive wave, there will be an impulsive wave, then you will wait for one period of correctional move. This is an impulsive wave. You are waiting for at least one period. You see this tiny period, it closes as a bearish candle. So you can position yourself for a trade the following week. You go to the confirmation chart. These are what they are like checklists. So you are not thinking, you are not racking your head for anything. On the confirmation chart, you are expecting an engulfing move. You see that this is where I can see an engulfing move. Like I promised, I'm still going to do separate video that will explain how to trade weekly wave, how to trade daily wave separately. But today my focus is the concept of entry box, using it as a sniper entry in Forex. That's my focus. It's just that I have to identify some of these things before I get to entry box. Are you getting it now? This is our daily money box, DMB. We are expecting the price to trade back into it. Once the price gets into the money box, you go to your entry box, entry time frame, it's okay, entry time frame. This is our entry time frame. So do you have a break of structure? Yes. At the tip of this particular money box, you have a break of structure. This is it. Can you see this? This is a break of structure, bullish, okay, a break of structure within the money box now. Now, the last candle that of the origin that created the break of structure is the area of emphasis. Now, we are not to pick our trade immediately the price gets to the area of emphasis. We are expecting an engulfing move, which means for a buy, there should be a candle that closes totally and close above a bearish candle, and this is where we got it. So your entry box now will be from here. You can take it at the tip of this place. This is your entry box, and the last low of within the money box. So this is your entry box. This concept is going to help you a lot. It's going to help you a lot. It's just that you might need to carefully begin to now do your personal research to look at what I'm talking about. You see this now. At Potential Miners International, if we are to pick this trade, look at this now. I'm going to refine this a little bit. You might be saying that you will miss a lot of trade. It's okay. But if I decide to pick it at the tip, I will be targeting ratio 1:5. Ratio 1:5. But if we are to get, so what I normally do is that I will pick it at the tip, I will now refine it back. So the refined position will be our entry, ratio 1:5. This is ratio 1:5 now. So I will now refine it until I get ratio 1:6. That's, you see, this will now be my position. Ratio 1:6. So I will set my entry orders here. If it comes back to pick me, all fine and good. If not, I will wait for another impulsive wave. I'm telling you, you will always get a trade if you follow this pattern. And once you have that, this is an impulsive wave, this is another corrective wave. You can still follow that and follow that. Let me just pick one more example. Let me use this. This was an impulsive wave. Was another impulsive wave. So I want to trade the next impulsive wave now. I will wait for one period of corrective wave or corrective move. Then the following day, because I'm trading a daily wave now, I will go to the confirmation time frame. I'm waiting for an engulfing move. You see this? This is an engulfing move. This is what will form my daily money box. Now I want the price to come back into the daily money box. I will go to the entry time frame. Entry time frame. Now on getting to the entry time frame, look at this now. This was the one that created a break of structure. I want you to look very closely now. This was a break of structure from within. You see it now. From within the daily money box, we have a break of structure around this place. Around this place. You see? Bullish. So the last candle of the origin that created the break of structure is our area of emphasis. You don't need to worry yourself. This area of emphasis is not where you pick trade. It's just an area that you believe that if the order with this area did not send the market back, it means this money box might not hold. Now the market did not get there. Remember that I said that if the market did not get there, you are expecting that there should be a break of structure. There must be a break of structure provided that the market touched into the money box but did not get to your area of emphasis. If the market can create a break of structure in the direction of your directional bias, you can still take a position. This was where a break of structure was. So your entry box will now be from here. The last low of the market is this place. Now if you were to take this trade, the challenge you will have is that this stop loss is too wide, and like I told you, you will have to refine it a bit so that you can get a very wide risk to reward. Like I said, I will position this like this, my stop loss below here. I will target ratio 1 to 5, ratio 1 to 5. Upon getting ratio 1 to 5, I will now come back. This is how I refine at po ten tial miners. I will come back and shift this entry point until I have ratio 1 to 6, and that's where I want you to look very closely now. Look at this, look at this, just look at this. Look at the entry. Very like sniper entry. You see this entry now. It's going to just pick you and immediately you are in profit. If it's going to be a profitable trade and you will do ratio 1 to 6, you might not necessarily need to worry yourself for ratio 1 to 6. In fact, you can just enter at the tip, do ratio 1 to 4, ratio 1 to 3, ratio 1 to 2, depending on your risk appetite or your ability to wait or your confidence in the system. This is how you trade, and I believe that if you can really listen to this video and understand the concept of entry box and you apply it to whatever strategy that you are using now, it's going to really change the game for you. I want you to stick to this YouTube channel, subscribe and turn on the notification bell so that the next video I upload, you'll be the first person to benefit from it. A lot of value will be coming on this YouTube channel, trust me. And of course, it's born out of our 6 years of research into how the financial market works. Till I see you in the next video, thank you for listening. God bless you. Cheers.